Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of the Volatility Index, ticker symbol VIX. And so here I am recording this on Saturday, November 2nd, after the VIX closed on Friday, November 1st, at a price of $21.88, being down about 5.5% on the day. And I also wanted to go over the 2x long VIX futures, or ticker symbol UVIX, which closed on Friday at a price of $5.92, being down 3.74% on the day. And so this is actually the one that I have been trading because you can trade shares of this ETF, whereas with the VIX, I have only been able to trade options dealing with expiration dates. And so I don't really like doing that, so I've avoided this one, but I have been using this one to kind of use as a gauge for when we might be spiking, basically when the price does close above $20 a share. When I got this alert right here at $20 a share there, when we do get above that level, there is quite the possibility that we could get a big spike like we saw on August 5th, when the VIX went up about 64% on the day. But if we do look at the price action over the course of these 3 trading days, it went up about 300%. So a very nice way to make some money when the market does go down. But, for me, like I said, I have not been trading the VIX. I have been trading the UVIX, and I haven't been doing it for massive swings. I've just been accumulating when it goes down, and I've basically been trimming at 10% increments on the way up, basically renewing those sells every day. So I've effectively just been accumulating on the way down and then selling at about 10% profit, which I could be making a lot more with it. But the idea is to, just accumulate when it's down and trim when it's up, just to make a little bit of money on the side. And so, I wanted to go over that with the UVIX, but first I'll go over the VIX chart and some of the drawings that I put up here, really just being some Fibonacci retracements. And so one is this retracement from that high that we hit on August 5th down to the low following that, which was hit on August 19th. And so I just do a retracement from the top to the bottom there to get an idea of levels to the upside. And so far, we haven't even gotten up to the 236, which is at a price of $26.56. So I just think that there's a lot of upside potential, especially, when all of this stuff going around the world, going on in the US, I think that there could be some volatility coming up. So I think this is a really nice indicator to keep an eye on, and then the UVIX to be trading. And then so if I do look at the more recent price action, I've done this yellow Fibonacci retracement that's going from this low that we hit on August 30th up to the high that we hit just a few days later on September 4th. But I might actually want to adjust that to go to this other high that we hit on September 6th. That was at a price of $23.76. We have not yet gotten up to that high. But actually, if I do adjust this back to how it was, there is something that I did want to talk about regarding this level, and that is that we've gotten up to it a couple times now. Here, it looks like at the beginning of October, October 7th and 8th. And then now here at the end of October on the 31st, happy Halloween, by the way, happy belated Halloween, and then here on November 1st. And so, it does look like the price got rejected from that level at 23.31. But the more times we do get up to that level, the more likely it is to break out. And with that being said, it's very possible that we could be heading up to any of these levels, ranging from 26.56 up to 65.73. So I just think that this is a really nice thing to be keeping an eye on, a nice indicator for when, a good time to be trading the UVIX. And so looking at this chart before I get into the UVIX, what I see is this gap right here that would be coming down to, let's see, a closing price on October 30th, which was $20.35. So I do think it is quite possible that we do pull back, fill that gap before moving higher. But since this is a volatility index, it is not a stock, it is not a company, it's quite possible we do leave that gap behind and we do gap up when Monday trading starts. So that is something to be keeping in mind. But yeah, now I'm just going to switch over to the UVIX because this is the one that I have been trading. And effectively what I've been doing, really I started trading it following this pullback. I realized, wow, this could be a very nice way to make a little bit of money if the stock market does go down a little bit. And it does seem to be like there has been a monthly pattern with, this big move to the upside here, August 5th, when markets were tanking. And then this other upside move was September 6th, so about a month later. And then over here, this peak was, I believe, at the beginning of October. Yeah, October 7th. And then now at the beginning of November, starting to break out a little bit. So, I do think that this is a nice thing to be accumulating over the course of the months, as price is down, and then trim as it breaks out. And so what I've been doing most recently with this is I have been accumulating it with an average at $4.96. But unfortunately, with these big moves to the upside, I am no longer holding any UVIX because, the thesis is, accumulate when it's down and then trim in 10% increments on the way up. But it's really just been like zig and zagging around the 10% profit for me. So I, as of now, have exited my position completely. Most recently, I believe, was at, $5.95, I believe. That was for a 20% profit. And so I've just been accumulating 10 shares when it's down. Basically every day that it's down, I accumulate more. And then every day that, it's up 10%, 20%, whatever it is, then I trim out of that position. And so it's just been like a really, really nice way to make a little bit of money over the past month or two, really since beginning of September. I've been accumulating on the downside here, trimming on the way up, accumulating on the downside, trimming on the way up. And so I am hoping that, because it does look like we've bumped into this downtrend here, which I'll take a step back and show you in a second, and also that we have bumped into the 786 here, which was the retracement from the high of September 6th coming down to the low of September 23rd. We can see that 786 at $6.16.5, and we hit a high on Thursday, on Halloween, of $16.15, so just below that level. And so I was actually concerned that this would be breaking out and I should not have gotten rid of all of my shares. But then I saw this downtrend. I got a little bit more reassured that we could be pulling back, especially to be filling this gap, which the closing price on October 30th for the UVIX was at a price of $5.32. So, while my average before was $4.96, I do like accumulating this when it's down, and it has been putting in higher lows. So, at this point, I took profits up here. So I am happy to buy back, 10 more shares at $5.32. If it goes lower, if it goes sub $5, happy to pick up another 10 shares and then, just trim as it does spike in volatility. And so, yeah, I just think that this is a really, really nice thing to be trading. I've enjoyed it over the past couple months. And so this downtrend that I have drawn here, I do believe I went over in the last video I did on the UVIX, but that is based on the pivot high from July 25th, which was at a price of $7.32. And then the other pivot point was from September 6th, which was that high of $6.70. So that's how you draw that downtrend. And, it does, this actually really surprised me when on October 7th, we got this massive green candle in the UVIX, went up 17% in one day. So a really nice big green candle there, but it closed beautifully at that that downtrend, and then the day after we did pull back. And so actually, let's see, the 7th was, let's see, that was not over a weekend. Let's see, the 4th. So this was a Monday when we had that spike, and then it started to cool off. And so with Monday coming up on November 4th, I could actually see this spiking, again, and then maybe pulling back, maybe finding this downtrend as support, which would be around like $5.80, maybe $5.70. So if this gap is to not get filled, if we are not to see a pullback at the start of next week, coming down to 532, I might consider actually to start reaccumulating at around $5.80 because, I think that it's likely to see another big move to the upside like we saw over here. And so just over the course of a few trading days, the price of the UVIX went up by over 200%. So I find that to be really nice, just a really great hedge, a great thing to, not be emotional about. I do not want to be diamond handing this. I do not want to be holding it long term, but to swing, I think it's great, whether it's for 10, 20, 30, 100+% profit. I definitely think this could be doing that. But the reason why I've been trimming at, 10% increments is because maybe it doesn't, move like it did in the past, going up to these levels, like $12 a share, which would be a 2x from right now. Maybe it doesn't get up to that level, which would be that 50% retracement from this downside Fibonacci that I have drawn there. And so, I just really like this a lot. And also, one thing I did want to mention, I did look at some other ETFs that do track the VIX. And the reason why I settled on this one, partly because it's leveraged, it's 2x leverage, so I think that's nice. But one of the things that I've kind of realized with ETFs, and that goes for, the UVIX here, and also with the natural gas ETFs that I've considered using, like the UNG, United States Natural Gas, or BOIL, which is 2x leverage natural gas. I find that when going into ETFs like this that track commodities or track the volatility, it's better to go with 2x, not necessarily for the 2x swings, but because you have contango. I believe, I'm not that familiar with it, but, with these ETFs, they do diminish over time. The value of them does diminish over time. And so I feel like having that 2x gives you a little bit of that edge to the upside. But, maybe my thesis on that is incorrect, but I have just found that, even though this does not produce 2x what you would get with the VIX, I am able to trade the UVIX without having to trade options, just trading shares. And, while it doesn't give me 2x what the VIX does, it gives me better than if it was not 2x leveraged. So I'm happy with that. And, I'm really curious to see if we do pull back maybe to like 530, 527.5, this 50% retracement right here, filling that gap, maybe settle there, and then we start to see some volatility. And actually, before the election, maybe we see a pullback and then a launch, a breakout. So yeah, I am really looking forward to seeing this gap get filled, and I'm actually going to draw that here. That is at 532, and I am going to mark that with a dashed thick blue line because that's how I like to mark gaps. And so hopefully that gets filled on Monday, just picking up 10 more shares. Maybe I want to add more if it does pull back to there. But yeah, I could see this breaking out from this downtrend, maybe corresponding with the election or maybe happening before it and then finding this downtrend as support. So yeah, I just think that this is a really nice thing to be accumulating as, we did get this spike back here in August. We have been seeing smaller spikes. And even though these are smaller spikes, this represents, let's see, a 64% swing to the upside, following that pullback. And then following the next pullback up to the high over there, that's about almost a 50% swing to the upside. And then now from the lows over here, that does represent almost a 30%, about a 27% swing to the upside. So just like, a lot of great volatility here to be taken advantage of with the UVIX. And so, yeah, I just wanted to put a video together for you guys to share that because I find it to be just a really nice thing to be accumulating. And if we actually do, before I close this, I might actually just take a couple measurements. So just thinking about, from the peak here to the valley, how much time lapsed between that top part and that bottom part. That was about 14 days or the calendar days, so 2 weeks or 2 trading weeks, 10 trading days. So about 10 days from the top there. And then let's look over here. Is that something that we repeated? This is actually to the low. That was, about 10 trading days. Here it says 11. So pretty close to, getting the bottom there and then getting a nice big move to the upside. Let's see over here. How long did it take to get to the bottom? Yeah, about 10 days. And so if we are starting to see a pullback, maybe it's actually good to not wait or to not buy the dip here at this gap. Perhaps it would be better to wait about 10 days to be buying the dip then. And so that could be corresponding with November 14th. Maybe that's a nice time to buy if we start to pull back on Monday. But if we are starting to break out, then yeah, it might be good to just hold. So anyways, I just wanted to share that with you guys. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, guys. Take care.